Good evening from InvestSharp. This is Randy Smotone with your Friday, January the 22nd market update. There was no economic reports today, but on deck for Monday, we will get the monthly existing home sales number. The political noise out of Washington continued today. There is a huge concern on Wall Street that Bernanke may not get reconfirmed. That continued the sell-off today. Earnings out today. McDonald's, GE both beat, and they both actually finished in the green today. There was probably some other earnings as well, but those were two that I was kind of watching. The dollar was mostly flat today. Gold, silver, and oil were all down, and copper was up. So we're looking at the UUP. We still have resistance up here. We have not taken out this 2320 area. At least, we actually went 2321, I think, but it's still resistance. MACD's turning up, so it still looks like we could take that out. Still lots of volume there, so we'll keep an eye on that. Light sweet crude futures were down another $1.54 to settle at $74.54 a share. Let's take a look at the Dow. The Dow closed down another 216 points to 10,172. S&P closed down 24 points to 1,091. Nasdaq closed down 60 points to 2,205. The Russell closed down 11 points to 617. The Russell held up the best, down only 1.79%. The Nasdaq had the biggest percent loss at 2.67%. So I think, they started going after the Nasdaq today because, last year the Nasdaq was up a lot. Tech were, huge profits in techs, big winners. So the institutions are taking their money off, trying to get the profits, trying to get out of the market, selling their winners, which is very typical. So they're definitely profit taking. The volume was extremely high again today at 100 to 200% above average volume. So institutions are definitely in there selling. So let's go over and take a look at the McClellan. So we're definitely looking at the McClellan. I think we were minus 49, minus 59 yesterday, something like that. We're definitely oversold, minus 79. I see back here at the end of October, we were like minus 120 or something. So we can definitely get a lot more oversold than we are right now. But we are oversold. So that's something to keep in mind. Look at gold. Gold is still holding up. It actually held up pretty well today, so we'll watch that to see if they start going back into this. If they consider that's kind of a defensive area to be in, to be gold and silver. Silver's holding this trend line support here. I don't think I looked at the S&P. S&P should have support here around this 1,085 area. We also still have some trend line support on the S&P, so we'll watch this 1,085. We're back here to this trend line on my MACD. Also want to point out that on a Fibonacci retracement from the March 09 lows to the high, that still be very healthy for us to pull back to the 23.6% or the 38.2%. These areas here at retracement, which would put us back at 1,036, or on the 38.2% would put us back to 965. Still be very healthy. It'll just feel awful while we're going there, but it still would be considered pretty healthy. Let's take a look at the VIX. So the VIX went flying higher today, up 22%. Lots of put buying, I'm sure. Let's go look at the VIX on the point and figure chart. So looking at the point and figure chart on the VIX, we went on a buy signal here a couple of days ago. We went flying through the bearish trend line, and now the new price projection on the VIX is 49. Let's all hope to heck we don't go there. Been there, done that. It was not fun last time. I don't want to go there anymore. So we'll watch to see if this plays out. Hopefully VIX will not get up to these levels again. Hopefully they'll get Bernanke confirmed and this will all settle down. So, I did want to talk about, once we're in this volatile environment like this, it usually takes us weeks to work through. So, keep in mind in this type of environment, we'll probably have, violent up days as well as, these violent sell-off days. So we'll have both. So we're currently in a correcting phase, kind of a repricing of securities. The number one priority in this type of environment is capital preservation, not trading. It's capital preservation. Now, if you're a day trader, it might be trading, but if you're a swing trader or investor, trying to get in and out, and it's just, catch a falling knife. So just be careful. I can assure you that Washington is scrambling around trying to figure out what they can do about the market right now. They're in this midterm election year. I can assure you they want the stock market higher, and they want a stable stock market so they can get reelected. So I'm sure they'll have plenty of stuff coming out of Washington over the weekend. Let's take a look at the sectors. So one of the 16 sectors we followed finished in the green today. The gold index was up 0.12%. The semi index was the weakest, down 5.29%. There was a downgraded semis today, and boy, they really hit them hard. So of course, I'm no chart watch for today. I'll post my weekly watch list on Sunday night. We'll probably start looking for some bearish setups into rallies is the way we'll probably play that. Let's take a look at the ES futures, which I usually don't do, but I want to look at that. Get ready for Monday. The low, this is a 30-minute chart of the E-mini S&P 500 futures. The low was 1,086.25, so we'll watch Monday to see if that's taken out or if it holds. So I'm sure, we're probably going to retest it, or even if we open higher, I'm sure we'll come back and retest this 1,086. So just continue to watch this 1,086 on the, say, the 2 to 5 minute chart. This is a 30-minute chart we're looking at, but watch it on a 2 to 5 minute chart. If we, take it out to the downside with lots of volume, you could definitely go short. If we hold this level, you could actually go long from here, keeping in mind that's on say, a 2 to 5 minute chart. So, say I want to talk about, once you're in the trade long, then you should switch to this 30-minute chart. This is at least the, strategy I would like to approach it at. Switch to the 30-minute chart. And if you're long, you want to exit on the first 30-minute candle that makes a lower high of the previous candle. So we're going up if we're going long. So you want these candles, you want the high of each 30-minute candle making a higher high. These are the coming down, but say these are actually going up. So you want each 30-minute candle making a higher high. The first one of these candles on the way up that makes a lower high, that means exit your trade long. This is a trade, not has anything to do with investing. This is just a day trade. Okay, so if you're short, like see here, you could have gone short this afternoon, pretty much around noontime, and stayed short all day long. Every one of these 30-minute candles were making a lower low, right? A lower low all day long. See, so you could have stayed short all day long in this market in the afternoon. But you want to do the opposite of that on the way up. You want to be making higher highs. See, so something to keep in mind, something to watch. Watch that 1,086 level. Let's take a look at the current market signals. We follow the point figure charts of the Dow, Nasdaq, S&P. The Dow did go on a sell signal today, and it has a price objective of 9,650. The Nasdaq was already on a sell signal, but the price objective went lower today to 2,090, and the S&P remains on a buy signal. So if we take a look at the Nasdaq, down here is the 2,090 level. Take a look at the Dow, 900 or 9,650 level. Take a look at a traditional chart of the Dow. So this is about 9,650 would be about down here, which is back to the November lows, which really isn't that bad. It just, like I said, it'll feel awful on the way down. That's not what we want. We want the Nasdaq. Nasdaq 2,090 level will be back here, which is about where we were November the 5th. So that's something to watch. We'll see if that plays out. We'll watch the MACDs. And that's it for today. Have a great weekend. And remember to always invest sharp.